Imagine this for a moment. You wake up one morning and the news is everywhere. Markets are collapsing, billions lost overnight, panic spreads around the world. Stock prices are falling faster than anyone can keep track of. People are scared, selling everything they own, trying to protect what little they have left. It feels like the end of the financial world. But here's the strange part. In moments like this, when fear is at its highest, there is always a small group of people who don't just survive, they thrive. They see opportunity where others see disaster. They use the chaos not to lose money, but to build fortunes. And today, I'm going to tell you exactly how they do it. First, let's understand something very simple. What is a crash? A market crash is when prices suddenly drop 30, 40, sometimes even 50% in a very short time. It feels sudden, it feels violent, and for many people, it feels permanent. But here's the truth. Crashes are not the end. In fact, throughout history, every single crash has eventually led to recovery. And in every recovery, those who invested during the darkest times came out far wealthier. Think of a crash as a giant sale. Imagine walking into your favorite store and suddenly everything is 70% off. Most people would run to the cash register. But in the stock market, people run away. They let fear take over. That's the difference between average investors and the ones who build wealth. So, how do millionaires think differently during a crash? First, they stay calm. They know panic leads to bad decisions. Second, they think long term. They don't look at weeks or months, they look at years. Third, they focus on quality. They buy strong companies, not just cheap ones. And fourth, they prepare. They keep cash ready, waiting for the right moment to strike. Let me give you some real stories. Back in the Great Depression of the 1930s, almost everyone thought the stock market was finished forever. But investors like John Templeton saw something different. In 1939, he borrowed money and bought 100 shares of every stock trading under $1. People said he was insane. Why buy worthless companies? But when the market recovered, those thin investments multiplied in value, and Templeton became one of the greatest investors of all time. Jump forward to 2008, the financial crisis hit. Banks collapsed, housing collapsed, people were terrified. The stock market lost more than half its value. But here's what happened if you stay calm. Apple fell to around $12 a share. Amazon was only about $35. If you had invested just $10,000 in Apple back then, it would have grown to more than $170,000 today. And the same with Amazon. $10,000 would have turned into over $50,000. Now let's look at something more recent, the COVID crash of March 2020. In just a few weeks, the entire global market dropped more than 30%. Panic was everywhere. People were pulling their money out as fast as they could. But those who invested in that moment, when fear was at its peak, saw extraordinary results. Apple, for example, dropped to around $60 a share in March 2020. Just a few years later, that stock more than tripled. And Nvidia, in 2020, it was just $54. Today, it's over $1,000. That's almost 20 times your money in only a few years. So, what's the lesson here? It's not about luck. It's not about guessing the exact outcome. It's not about being ready when opportunity arrives. Here is a simple step-by-step strategy you can follow. Step 1. Build cash reserves. Don't invest every single dollar when times are good. Save some for when times are bad. Step 2. Identify strong companies. Look for businesses with profits, strong cash flow, and a real advantage in their industry. Step 3. Buy during panic. When everyone else is scared, that's your chance. Step 4. Hold and wait. Don't sell too early. Wealth takes time. Step 5. Be patient. Sometimes it takes months, sometimes years, but history shows markets always recover. Now, let's also be honest. There are mistakes that can destroy your chances. Mistake number 1. Panic selling. The moment you sell everything in fear, you look in your losses. Mistake number 2. Chasing weak companies. Just because a stock is cheap doesn't mean it's good. Some businesses don't survive crashes. Mistake number 3. Trying to time the exact bottom. No one can do it perfectly. The best approach is to buy gradually, little by little, while prices are low. So, let me leave you with this. Every crisis in history has felt like the end. The Great Depression, the dot-com crash, the financial crisis of 2008, the COVID crash in 2020. Each time people said, this is it, the market will never recover. But each time it did, and each time fortunes were made. So the next time you hear the news shouting that markets are crashing, ask yourself, will I join the panic? Or will I see the opportunity that others can't? Because remember this, millionaires are not made in calm times. They are made in crisis. And maybe, just maybe, the next crisis could be your moment. Thanks for watching and see you in the next video.